It's halfway through the year. We're going through a recession, if we're not already in one, and you haven't even started investing yet. My name is Nevada. I'm here to help you through your financial journey while I try to figure it out myself in this crazy world. Today, we're going to be talking about how to start investing and some options for you to get started right now. And not those kind of options, if you catch my drift. So first thing, doesn't even make sense to invest right now. Aren't we going into a recession? I mean, yes, I'm not going to deny that. We're going into a recession for sure, but there's plenty of opportunities for you to invest, and you're going to see that throughout this video. Remember, the purpose of investing is for long-term profit, not for short-term gains. And there's no better time to start investing than today. Well, maybe yesterday, but you can't go back in the past unless you have one of those like Back to the Future cars with like whatever, what is it, 1.2 gigawatts.
But I need a nuclear reaction to generate the 1.21 gigawatts of electricity.
1.21 gigawatts!
And I don't have that. I don't know if you have that. So right now is the best time. So as these stocks continue to dip and dip and dip, we're just going to buy and buy and buy. And we keep buying more. We keep buying more. You know, like I like to think of it like it's a flash sale on all of these stocks that's happening. Like it's a massive discount. Again, like I said, it's no better time to invest than today. Okay, now I feel like I'm kind of sounding a little bit salesman-y and I'm trying to pitch you this whole like lending product for you to make money quick and all these things, but no, it's the complete opposite of that. I'm simply just trying to inform you and I'm trying to let you know that although we're going into tough economic times, that does not mean that you cannot grow your money. One important thing to note throughout everything I'm going to say in this video and in any investment video is do not over leverage yourself. Do not put in more than you're willing to risk. Do not put in more than you're willing to lose. That's how you end up hurting yourself. And that's just a rule of life. You know, that's not even investing. You don't take on more than you can handle in anything. Okay, now you might be ready to just start investing, right? So how do you start investing? Well, we're in 2022 right now, so thank goodness we have a lot of options, and these are free options. Notably, pretty sure you've heard of it, Robinhood, you have your Weebles, TD Ameritrade, your Charles Schwabs, etc., etc. And each of these platforms are tailored for a specific user and they each have their own benefits and some of them have their own downfalls. Now, if you're just starting out, I would absolutely recommend a Robinhood or a Weeble just because those apps are a lot more beginner friendly. An important thing to know, I have links down in the descriptions to all these platforms and to all these resources. Some of them I do get a kickback on it. Like for example, Robinhood, I will get a free stock and you'll also get a free stock. You know, it's a win-win, why not? Okay, but let's move away from stocks a little bit and let's get into something a little bit more spicy and sexy. Bonds. I know, a sexy bond. Never thought I'd ever say that in my life. But this bond right now is a lot less volatile than stocks. It's giving a guaranteed return of 9.7%, I believe. Somewhere close to 10%. And it will move with inflation. I'm talking about a Series 1 savings bond. Okay, so what is the Series I savings bond? Well, if we go to the source, Treasury Direct, it says this bond earns interest based on combining a fixed rate and an inflation rate. Now that fixed rate stays the same for the life of the bond, but that inflation rate changes every 6 months. And right now for bonds issued between May 2022 and October 2022, have an interest rate of 9.62%. And mind you, like I said, we're going into a recession. Inflation is crazy. You guys see it happening everywhere. Gas prices, food, all over, right? So these interest rates are going to continue to go up for the next year, 2 years. So you might as well just capitalize on that. If you want some more information on the bond, again, link in the description below, treasurydirect.gov. Now, if you're gaining some value from this video, hit the like button. Don't forget to subscribe and definitely turn on those post notifications for more videos like this. This one's like a little head scratcher. This one's like a Hail Mary. This is like super, super down the line. This is not necessary. Dare I say crypto? Now, I know that's going to be a little bit controversial, but we can't deny it. Crypto will be the future. No questions about it. And I don't think it hurts to put a couple dollars, even if it's $5, $10, $20 every month as you just build out your crypto portfolio. At the end of the day, we're just trying to grow our portfolios and diversify as much as possible. We don't want to have too many stocks. We don't want to have too many bonds. We don't want to have too many this. We don't want to have too many that's, right? Now there are plenty of cryptos out there, and I'm pretty sure about like 1,052 just came out today alone. I'm no expert, but if you'd like me to do a video on my crypto wallet right now and explain why I have the coins that I do have, drop it in the comments below. Okay, the last thing we're going to talk about, which I addressed in another video, is mutual funds. So like I said, I addressed this in another video, but I'm going to just give you a quick overview of it. So essentially, a mutual fund is just a group of portfolio managers taking a bunch of money from a host of investors and investing that money for them. Now, the reason why this is beneficial is if you could pick the right fund, you won't have to worry about purchasing and controlling your entire portfolio. It will give some time right back to you because now you're paying somebody else to do that. And you're usually not paying them that much. They'll typically take about 1% or so of how much you decide to invest. So if you give $1,000, they're going to take 10. If you give 100, they'll take $1. And I think your money can be much better managed by somebody else who has the time and the expertise to do all these things and run these market analysis and divest in this and invest in that and, adjust it based on how the market's looking and everything like that. How do you get started into a mutual fund then? Well, there's a lot of different funds out there, the same way there's a lot of different cryptos and there's a lot of different stocks and there's a lot of different bonds. But I'll be breaking all of that down and how to select the right fund, and I'll also be purchasing that fund. So make sure you subscribe and make sure you got those post notifications on. So there's plenty of ways that you can be investing your money right now that are safe, reliable, and they're going to provide you long-term profitability. My biggest advice is to put money that you're willing to lose, money that you can spare into your investment. You don't want to be putting money that you're going to be using for your bills and for rent and all these other things. The point of investing is for long-term growth. However, if you want the potential to make some large short-term gains, no matter if the stock market is rising or increasing, check out this video on stock options.